Hello everyone, welcome to Trade Breakdown on EU. As always, we're gonna start off with a daily time frame to determine our higher time frame down liquidity and our daily buys, right? Now, some of you have been asking me whether that the daily chart is the only higher time frame I use for determining my drawn liquidity, and the answer to that is no. I also use the weekly time frame to assist me in determining my higher time frame drawn liquidity and then refining that down to the daily time frame, right? Now, in these breakdowns currently, I'm just showing you my thought process on the daily time frame because I believe that's more than enough to assist you for the time being, right? But as we move on to the next levels, I'll also make sure to show you my weekly analysis and weekly thought process too, right? For now, if I showed you that, it would be too overwhelming for you to digest that information from the weekly, right? So that's why I've decided that I'm just gonna stick to showing you the daily chart at the moment, right? But do remember that the weekly time frame analysis also goes behind determining the higher time frame drawn liquidity and building a higher time frame narrative. Now, for some of you, these breakdowns might have already started to become a bit boring and repetitive, right? Because I'm just literally repeating the same stuff over and over again, right? But remember that that's exactly how it's supposed to be, right? It means that I'm using the same stuff over and over again, day by day, to find entries and take trades, which means there is a consistency factor to it. And that's exactly what our aim as traders should be, right? If you're always looking for some type of dopamine rush and trying to look for excitement and something interesting here in trading, then trading isn't the place for you, right? Now, of course, at the beginning, it will be exciting for you to learn these new things, and that's how it should be. But as you keep spending time with the charts and gain more and more experience, you'll realize that you gotta do the same stuff every single day without anything new, right? You gotta repeat the same stuff over and over again to find trading opportunities, to find trade ideas, and to do your analysis on the higher time frame, right? Professional traders and consistently profitable traders have the same repetitive routine, right? They have the same repetitive routine, the same boring system, and the same reoccurring trade ideas and entry models that they use, right? They've almost became detached and blind to it, right? They're almost emotionless about it. And that's exactly how it's meant to be, how it's supposed to be, right? And you should try to familiarize yourself with this psychological aspect, right? So that whenever you feel like you've been bored or you're repeating the same stuff over and over again and it doesn't feel good to you, you should remember that that's exactly how trading is and that's exactly how it should be, right? Professional trading is about repeating the same stuff over and over again and having consistency in your approach, right? And consistency comes with discipline, right? And discipline is doing the same stuff no matter how you feel, no matter how you think about it, but just believing in yourself, believing in your modeling system, and just doing it, right? No matter what. Now, the thing with new trader is that they think that you always have to be highly energized and exciting, right? Whenever you're doing your analysis and taking trades. But believe me, that's not how this stuff works. It's extremely different than what you have in your mind, right? You'll have to repeat the same shit thousand, if not hundreds of thousands of times as long as you keep trading, right? You'll have a single model, a single entry setup, and you're gonna repeat that every single day, right? And of course, it's going to be boring and repetitive. So whenever you feel like you don't want to watch these types of videos because you're just listening to the same stuff over and over again, then remember and always remind yourself that that's exactly how it's meant to be, right? Watch and repeat the same stuff so many times, so much times that it becomes subconscious for you, and you have to force your mind to make all of these things subconscious so that you don't even have to think actively about it, right? Though that's how it's meant to be. And as they say, repetition teaches the donkey and practice makes perfect, right? So remember this at all times. Now, getting back to the charts, you can see all of this price action. I have already discussed this price action in the previous breakdowns, but let me give you a small summary again. So initially I was expecting this low to be taken, and after that low is taken, my down liquidity next would be this range high right here, right? Now, what happened is that we, as soon as we purged this low and price then went above and closed above and formed this order block, I chose this order block as my key level, and I look for price to react to it and then expand from here. And you can see price reacted to it on Tuesday and then it expanded above, right? So I had determined my higher time frame drawn liquidity to be this range high. Now, you can see that the Tuesday candle didn't took out the range high, right? But instead it closed below, which means that now I can have another trading opportunity or opportunity to find a trade in a CRT on the lower time frame to profit off of this drawn liquidity, right? We still haven't reached that higher time frame drawn liquidity, and maybe on Wednesday I can find another trade there and try to position myself towards that higher time frame drawn liquidity and exploit it, right? That's my main objective. So the drawn liquidity is this range high, right? And now let's go down to the 4 hour time frame to find a CRT there and then to position myself in that CRT towards this higher time frame drawn liquidity. So right here on the 4 hour, you can see right before we took out the range high, we stopped, right? We stopped and closed below on Tuesday. So then on Wednesday, as soon as the Wednesday candle opened, I decided to look for another trading opportunity on the lower time frame. And obviously, I couldn't have just entered right away, right? I first of all had to find a CRT there and then trade that CRT on the lower time frame, right? So on the 4 hour, initially I was expecting this 4 hours candle low to be taken as a CRT and then price to expand above from there to take the range high and reach it down liquidity, right? I was initially expecting this candle's low to be taken, right? But then what happened is that I looked at the DXY or the dollars chart, and what I saw is that we had a SMT divergence with DXY, right? And what happened is that on DXY on dollar, we filled the 4 hour FVG with the next candle, but Euro dollar or EU struggled to take out this CRT low and struggled to fill this FVG, which means that we had an SMT divergence, right? DXY filled the FEG, whereas EU or Euro dollar couldn't, which means that we had an SMT. And as soon as I saw that, I dumped the first initial idea that I had and decided to look for another entry just off of this small candle, because price showed me that it's highly unlikely for price to go below to take out that candle's low or test the FEG because of the SMT divergence with DXY. So I just decided I'm going to look for this candle to be purged and I'm going to trade off of that instead of the other one, right? Does it make sense? Now, don't worry, there will be a separate whole chapter on SMT divergences as well. And there I discuss everything that there is about it. But this is why I decided to look for just this candle to be taken instead of the other one, right? I knew you were gonna ask me this question if I hadn't discussed this part. So that's why I shared it with you so that you aren't confused as to why I chose that candle instead of this one, right? So that is the answer to that. So I initially expected this candle is a CRT for price to reverse from, but then saw the SMT divergence with dollar, so decided to adjust to the new situation and decided I'm going to choose this candle as a CRT, right? Now this candle in itself is really small, right? And if I just choose the high of this candle as a target, then that wouldn't offer me a favorable risk to reward ratio, right? Because the range is too small. But we know that we've got this range high right here, which I could use as a target, and the CRT that I've chosen would be just used for finding an entry and putting my stop loss at the right place, right? So as soon as this candle was purged, I decided to look for a model 1 entry here on the lower time frame on the 15 minute, right? And let's see what we've got on the 15 minute. So right here you can see this is the CRT low right here, and it was purged right at the open of the London Oval zone during 2 a.m. Eastern time, right? Which made it a high probability CRT because it was purged at a key time, right? So after it was purged, I decided to look for a model one entry there, and took an entry here right after this order block was formed, and my stop loss was below the order block low, and I targeted the higher time frame dollar liquidity, which was the 4 hour or the daily range high, right? That is the whole trade breakdown on you.